We told you that Kevin Warsh was speaking on the 15th of July, and as we expected, there was nothing unexpected about that meeting. He did mention that he had a priority towards combating high inflation, citing artificial intelligence investments, and basically declined to provide any specific interest rate guidance. Now, while he has in the past spoken about looking towards the trimmed mean PCE inflation rate, we'll cover a little bit more on what that could look like for the American markets today. Oil's price action into new highs going towards the 50% Fibonacci level. More updates on the war and what's been happening over there. SPX coming back into its triangular range, which is a little bit disappointing, but probably expected. Some updates on copper versus gold, Bitcoin, Ethereum, and basically some crypto news as well. All of that in this week's video, so tune in. Hello, everyone, and welcome to Strategic Markets, your place for technical and fundamental analysis all at once across many markets. Now, into our end of week session, I start us off with the price of oil. I did not want to see the price of oil back to these levels, and honestly, as frustrating as it is for the common person as well as war-torn nations as well, yeah, we're going back to the near $90 levels. The Fibonacci being the 50% line, it's sitting at $89.63. The problem over here is when you do draft this Fibonacci from the lows of 15 December last year to the highs of the 9th of March this year, yeah, you can see that the 50% level sits on the $89.63 point. If we do go higher from that particular 50% level, we have grounds to be concerned. Okay. And that's where the narratives for rate hikes and other things start becoming extremely scary, because you're already seeing that the RSI over here on the weekly is flipping back above our moving average. So in that particular case, if that RSI starts moving up above that, we are possibly looking at price action for oil to go higher. And why would it not when we are in a full-blown war? We'll cover more on that in a bit. But as we did say earlier, Kevin Warsh was speaking on July 15th, and basically there was nothing unexpected about that particular meeting, because what can he really say when the situation is like this? At the end of the day, he can say that he wants to combat high inflation. He can talk about AI investments a lot, but all he can do is be reliant on data-dependent policy to drive decisions in the market. Now, we've been discussing about possible 2 rate hikes. I am a believer that we won't have rate hikes in a non-war situation, but in the situation that we do have an ongoing war, that kind of really just puts a lot of complexities in that particular narrative. So be mindful of that. But the only instance in which I see a war happening with America and Iran, but at the same time, America doesn't choose to hike rates, if not, even look at cutting rates, which kind of seems hilarious right now, is if they were to go back to Warsh's old playbook, which he's mentioned in the past. He's actually even set up a task force as well with a little bit of a deadline to see how they can use the trimmed mean PCE inflation rate as a means method to calculate inflation in America, right? Now, in this particular case, if you look over here, just taking an example, May as an aspect, you can see over here that excluding food and energy, which energy being, the biggest aspect for PCE, the rate came in at 3.4% on a 12-month basis. But if you just look at the trim mean PCE, that was at about 2.4% mark. So you could basically get a 100 basis point reduction just by using this particular method. And if Warsh in the next couple of weeks does come in and say, this looks like a decent method, even though, and hilariously, the Fed Reserve Bank of Dallas has actually come out and said that, hey, this particular method is not in consideration for geopolitical events or wars. So that would be something that, you need to be across, and they've given that guidance. If they still decide to proceed ahead with using this particular method for calculating inflation, it's going to be fairly concerning, but it's something to be, just to be aware, because I'd be very interested to see how that particularly follows through for the American economy. But what is his pal Trump doing on the other side of all of this? Well, President Trump has basically said, let's open the gates of hell on Iran after 2 US soldiers were killed in recent attacks. So obviously, I'm really sad to hear about the loss, and in war, this is sadly very common. But this is really not the headlines we want to see. But on the same time, Trump is saying our economy will boom like never before. So war and profits, I guess he knows the playbook on how they go, particularly hand in hand. But yeah, definitely a little bit conflicting advice there on his side. But what isn't conflicting about him whenever he speaks? Because when we look at this particular example, he says, we have reached an understanding with China regarding Iran. Beijing will not provide weapons to Iran. China then responds, there's been no such discussion with the US. Washington appears to make this announcement on its own without informing us. And then Trump says, oh, China is denying it because it doesn't want the world to know the truth. Even if no agreement exists, they will still continue to pressure China not to supply weapons to Iran. So literally, there's nothing to really trust over here, but from what he's saying, but the actions are there, and the fact is that currently there is a full blown out war going, affecting neighboring instances, countries. So unless we can get oil flowing through other alternatives, through land-based options or other sea options except the Strait of Hormuz, then we're probably looking at better inflation or, hopefully stabilizing inflation over the next couple of months. But like we covered in our last week's video, and if you haven't watched that yet, please go ahead and do, because it covers into perspective of CPI and how CPI data is a lagging indicator, and it's not a relevant indicator to use to define the current growth of the economy. So just because CPI came in lower based on energy and energy costs going down because oil went down due to the memorandum of understanding to delay the war, then yes, that would have been great if we were in that particular situation. But now that that's not the case, and we're back to war situations, be a little bit concerned because CPI could very easily go up that high, especially oil is just south of being 90 USD. So keep that in mind. And like I said, Strait of Hormuz has been closed. Only 10 ships have transited over the last 24 hours. Extremely concerning. Doesn't look like to fix anytime soon. And we've been covering the US yield curve regarding Treasury bonds between 2-year yield and the 10-year yield. We have gone a bit higher on the spread over here a little bit to 0.42%, which is a little bit of a good sign. It's not really great. And, that could have come at the back of Warsh's speech and what he's had to say, and at least, his commitment towards the American bond market and there, but it's not anything great. So unless we are looking at going above 1% anytime soon, which will really signal some strength over here, or, even 0.8 to, 1% or so, and then we can continue working our way better towards that. That would be great. But right now we've been ranging between 0.4 and 0.3 for a while now. So just keep that particularly in mind as we are looking at these spreads over the last couple of weeks. S&P 500, on the other hand, that one is actually coming back into this triangle formation. So we have recently just set a bit of a lower high and a, over here. And we haven't set a lower low just yet, but yeah, we are definitely forming a bit of a triangle pattern. So we'll see how the S&P 500 goes over here. The Russell 2000, like we've been covering, came to the 3000 level, did not break it. If anything, it's having a bit of a reversal. If the MACD over here points towards a bearish crossover anytime soon, then yes, in that case, just be mindful that Russell could also follow through with some downwards price action, possibly coming to support at the 2800 level, which is prior resistance. So that's one point. Copper versus gold similarly actually has hit resistance as well. Copper versus gold, we look towards for growth in the American manufacturing market. And yes, it's come towards the 200-week SMA and found resistance this week. So see how that particularly closes on the week and then opens up next week and goes through. We'll obviously cover that for you as well. But yeah, this is definitely something I'm looking for, because the moment we close above the 200-week SMA, now that is going to be a very, very strong point for us to witness, because every single time it's done that, it's been full-blown strength in the market. And it happened in 2020. And also in 2017, 2016, and that was really good times for the market. So I'm interested to see how copper versus gold performs. Bitcoin, on the other hand, though, we can see over here, we are ranging sideways. We're not making that strong higher highs as I would want it to, but we are slowly trailing higher. The good news is that we are above the 200-week SMA. So that's at least good news over here. The red line over here, that one is We're trailing above it now. And if we stay below it for too long, last time in 2022, we had that happen where we broke below the 200-week SMA, but that was because we had the FTX collapse. We had multiple strong entities starting collapsing over here. We had Michael Saylor selling around this area too. So yeah, there was like a full-blown crypto structure collapse, sentiment collapse, but this time, that hasn't been the case. There hasn't been that many large entities selling. So anytime we got around the 200-week SMA has definitely been a good time to buy. That's just a statistical figure. That's not financial advice there. So just something to be across, because I personally am dabbling in some risk assets right now myself as we are in this particular lower space. So that's just my opinion on things. But yeah, if you don't see Bitcoin go below the 200-week SMA, don't be surprised, because the only instances it's done that in the past is generally because of really strong structural collapses in the narrative of the crypto assets. Similarly, on the Bitcoin monthly chart over here, the 14-year trend line we've been discussing for a while, look, we are broken below it for now. My hopes are that before July end, we do cross above this 70K mark, or the 72K mark, to come back above this red line. It's only $5,000, and considering, we've already moved up reasonably high in the past, we have done reasonable volume of $8,000 candles. So we'll see. We're right now at a $5,900. So it would need to be a strong move, but that could happen if Clarity Act is looking good and to pass, because the full details of Clarity Act are coming out on July 20th, is what they're saying. Okay, now they've said this multiple times as well, though. So although I'm trying to say that there is a good narrative for us to focus on right now, Clarity Act is still in the swing of things. And they say the full details will come out on July 20th. So let's just do the sign of the cross and see how that particularly goes. But to give you a bit of a summary, on July 17th, there was a U.S. Financial Service Subcommittee meeting on digital assets and the relevancy of the Clarity Act passage in the House. There was a legislative push. A lot of people got together. They wanted to, get the Senate to act on the Digital Asset Clarity Act. Then in that particular case, they also want to discuss the goal of the Clarity Act, what it seems to get through, how it competes with other countries and the benefits for that, and at the same time where the bill currently stands and how they can get it to push further. So there was a bit of an education piece is definitely being discussed, which is definitely showing some movement and momentum coming through with that, and that momentum will also have an impact on things such as Ethereum, which is right now also in this multi-year triangle pattern over here, trying to actually break upwards in this particular range. And, we were doing great in the middle of the week, but right now towards the end of the week, we have lost some strength and we have come below this particular green line again to test it as resistance. So does it close up? I would love to see the weekly close above this. That would be great. But if not, the next week will be that deciding aspect. But what has closed above resistance is the Ethereum, actually the ETH BTC ratio right now is looking really promising to close above resistance. Obviously, that hopefully doesn't crash over the week. But if it doesn't, if it stays where it's right now, this is looking reasonably good for Ethereum against Bitcoin. And when Ethereum against Bitcoin grows in strength, then in that particular case, altcoins look great too, which we are hoping to cover. Like as soon as good momentum comes through, I want to make a video with Steve regarding the impacts on crypto assets and narratives, and at the same time how that is looking for the market. So you would love to see some good movement over here for ETH BTC strength. But on that, the last thing I want to leave you with is yes, US B2 bombers are now heading towards Iran. Military operations are underway. Trump is said that he hasn't posted in Truth Social within 24 hours, so maybe he's going to come out with some massive news on Monday. Expect volatility, guys, which is why, like, if we did have a peaceful situation of the Strait of Hormuz was open, it would be really good to see a easing narrative, because that is what we had pre-war. But ever since we've gone down this particular path, all we are seeing is volatility. And with that being said, we got to approach it with a little bit of caution and can't just go full blown excited, even though there are some indicators like copper versus gold or the ISM that do show the risk is moving in a higher appetite. Just got to proceed with a little bit of caution. But on that, I'll pass it over to Steve to see what his thoughts are on technical analysis.
Thank you very much for that, Yash. And I think you have summed it up perfectly by basically saying that what we expected was Definitely not unexpected, because essentially everything that we were basically saying on Wednesday was pretty much along the lines of what really did happen. We virtually had everything that was going on in terms of the Kevin Warsh speech pretty much along the lines of confirming what we were suspecting in terms of basically everything with going on with the bond market. Bond market itself we knew was weak, and essentially in terms of things, it didn't really strengthen or change much following that particular speech. We'll go on to that in a few moments. But essentially, as you can see from here, in terms of the Brent crude oil markets, overall, we really have just been having this edging upwards, 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 upwards throughout the week and over the last couple of weeks. There really hasn't been much more in terms of any change apart from this general trending upwards that's been going on. Now, Yash had presented an $89.60 level in terms of that 50% Fibonacci, that everything was going upwards and upwards and edging towards. That coincides very, very nicely with this $90.10 level that we were basically mentioning for quite some time in terms of the 10th of March support resistance level on this chart that we're actually looking at right now as well. Now, give or take probably around about like 50 cents between those two levels. But essentially, these kind of zones, if you want to call them that, they don't have to be exact levels directly. But these zones that like to get tested are pretty much these kind of areas where prices gravitate towards. And overall, you can actually see that the prices themselves are heading towards those areas as we speak. Now, if you really want to zoom in a little bit closer, let's do that right now as we speak as well. Look at what else is actually hanging around that particular area as well. It's a declining 50-day moving average as well, being that blue line. So overall, we've got a lot of movement, a lot of areas of interest that are actually floating around that particular zone right there. And right now, that particular 50-day moving average is $89.93. So expect a little bit of resistance at that particular area, being $89.60 from what Yash was saying, $89.93 from that 50-day moving average, and $90.10 being pretty much that potential support level or potential resistance level, whatever you want to call it, in terms of that area, which is actually on the Ichimoku chart from the 10th of March. So a lot of potential congestion could occur around that area. Let's keep an eye on that and see exactly how the price reacts at that level. When we also take a look at USO, we've actually got even more congestion up at that area as well. Because when we take a look at the 50-day moving average coming down at that point there too, that's actually converging around the $125.85 level right there. So we've got a lot of potential congestion areas right above. And on top of that as well, we've actually got support coming in with the 100-day moving average being the white line. So we could actually have a little bit of up and down movement until the price decides to break out one way or the other. So there could be some very, very interesting times ahead in terms of the price of crude oil, USO, all of those kind of things for some time. But overall, when we take a look at the price of oil, we've got higher highs and higher lows forming on the lagging indicator in terms of USO. And if we go back to the Brent crude, the same thing there in terms of the lagging indicator for Brent crude as well. So that's important. If we switch across to the bonds overall, when we were having a look at Wednesday's price action, which was when Kevin Warsh spoke, price of bonds really did not do all that much around about between Wednesday and Thursday. If anything, on Thursday, it actually fell at the beginning of Thursday's trade, quickly recovered to pretty much break even at the end of the day of Thursday's trade. Friday's trade was interesting though. On Friday, we actually jumped, gapped up, and then actually came back down after it actually tested the quarterly VWAP, being that pink line. It couldn't breach above that quarterly VWAP. It actually went up and tested as high as the 15-day EMA, but couldn't stay up above that level either, and actually came back after testing it. So overall, we haven't got enough strength in the bond market to push it up above those levels in terms of the short-term moving average or the quarterly VWAP at this stage. Bonds are staying down, which is actually keeping the interest rates up. So overall, they're actually staying up above the short-term moving average of the 15-day moving average, and it's also staying up above the 50-day moving average as well, but not high enough to stay above the 8-day EMA at this stage towards the end of the trading week. So a little bit of mixed signals going on there overall. Interestingly enough, though, in terms of the VIX, which is the volatility, this is a very, very interesting thing we do need to keep an eye on. Overall, we're actually starting to form higher highs and higher lows in the short-term short-term price action. And we've actually had enough to close above the 200-day moving average being the red line, as well as the 150-day moving average being that orange line. but not enough in terms of the volatility to close above the 100-day moving average being the white line. So we're starting to see a bit of constraint overall, which is really, really fascinating. Now, if we have a look at the indices themselves, this is where things get extremely interesting because every single one of the indices themselves, which I'll go through in turn, have closed below the short-term moving averages as well as the quarterly VWAP, which is signaling some weakness across the board, which is really, really fascinating compared to what we were talking about midweek, because we were actually starting to see the SPY as well as the Qs actually starting to get a little bit more strength. That's now actually out the window at this point in time, at least on the short-term perspective. The SPYs have actually now also closed beneath the 50-day moving average, okay? Keep that in mind. The Qs, same thing. In fact, if anything, the Qs have even rolled over even more. Technology really got hit towards the end of the week, especially the semiconductors as well. But look at all of that. All of these short-term moving averages, everything's just rolled over completely. 50-day moving average rolled over that as well too. Everything's really, really coming down. We could even be going down to test the 100-day moving average at this stage if things don't actually improve anytime soon. Even the short-term support here has actually been broken as well. So that's the Qs. Have a look also down at the Dow, okay, or even towards the diamonds. You can really see that with the quarterly VWAP as well. You can really see that everything started rolling over there. We may even be going down to test the 50-day moving average on the diamonds too. Looking at the Russell, same situation there. So overall, we can really see that the Qs themselves, being the tech-laden stocks, has really rolled over the most now. We were really seeing a fair amount of strength in the Qs earlier in the week. No more. Everything else is starting to roll over in the general scheme of things. The chart of the week, though, actually is now, believe it or not, the Dow Jones Transportation Index, which is consisting of the railroads, the airlines, all of those kind of things. So really keep an eye on this. Have a look at the strength in this. Okay? I'm actually going to just get rid of this for a tick, and you can really see even the lagging indicator is broken out above the price action. Now, this is a component like we've been talking about in many videos earlier. This is a component in terms of Dow theory. Now, it's not being supported by all the other indices at this point in time. This is a breaking away all on its own. But essentially, this is the index or the sector is a composite of things that move things. Like I said, the railroads, the airlines, all of those kind of things. And this is actually really starting to move and really move in a big way. Above all of the moving averages, you can see all of that. Of the moving averages, the short-term moving averages, the quarterly VWAP, even the yearly VWAP, everything moving along quite nicely. So that's something to really keep in mind as well too. But it's not being supported by all the other indices. So we're getting disjointed, divergences, all of those kind of things, put any name you like on it. It's really, really fascinating the way that's all moving along like that. So that's definitely something else to keep in mind. Now let's have a look what else we've got here. Gold and silver, let's have a look at those. Completely, there's no other way of putting it. Just really, really weak. It's beneath all the moving averages, beneath the short-term moving averages, beneath the quarterly VWAP. Lower highs, lower lows on the lagging indicator. Okay? There's nothing suggesting any strength here at all in terms of gold. We've been talking about this for a while. Is this unexpected? No. We presented a video on this a long, long time ago, which was suggesting weakness in the gold area as well, unless it got back above these support resistance lines from back in October. That's the kind of thing that's been talking about there. Same with silver. In fact, if anything, silver's actually rolling over even worse than gold. You can see that situation right there. Same thing with the lagging indicators. Lower highs and lower lows going on right there as well too. Copper versus gold was a thing that Yash just talked about before as well too. This has been a bit indeterminate in recent times. It was starting to actually show a bit of strength overall here, but now all of a sudden it's starting to roll over as well beneath some of these short-term moving averages and now testing the quarterly VWAP as well. It's not doomsday at this point in time, but it's really starting to test quite a lot of these moving averages and quite a lot of these indicators as well. Keep an eye on this. This is going to really show you whether or not the strength is still in the market, especially in terms of the tech area. But another interesting chart overall now is iron ore, starting to show a little bit more strength. Not overall real amount of strength overall, but it's starting to actually turn from what we were actually seeing with a lot of weakness back over here all the way through to about the beginning of July. But now we're actually starting to actually see a little bit of strength above the short-term moving averages in the quarterly VWAP, but nothing to write home about yet, considering the fact that our Tenkan Sen has not crossed over the baseline as yet. And also our lagging indicators are actually showing higher highs and higher lows, but not enough to actually cross over the unit price as yet either. Once some of those things start actually going, you're going to then see a lot more strength in iron ore. But what about Yash's favorite of Bitcoin and Ethereum? Well, we're still above support and resistance lines from April of 2021. Yes, we are. We're still above the short-term moving average. We're still above the quarterly VWAP as well. There's a lot of strength starting to come in We're starting to get back above the cloud here at this point. Another sign of positivity. Lagging indicators are starting to break through the Tenkan-Sen. Another sign of positivity. Is this enough to basically say all in? Not quite yet. We still need to basically see higher highs and higher lows in a lagging indicator at this point. We've got the Tenkan-Sen above the baseline. We're starting to see some things coming through, but not enough yet to really show everything is coming along absolutely ultra smooth until you really start seeing higher highs forming on everything coming through overall. It's getting there. It's starting to hammer out a base, but you really want to be seeing all of the cues, everything else coming through as well before you really start seeing everything going through. On top of that as well, you're probably seeing more strength coming through with Ethereum at this stage compared to Bitcoin overall, but you're still below a lot of these other indicators at this point in time with everything else going through. You're still below a declining 100-day moving average even for Ethereum at this stage. You're still below the yearly VWAP at this stage. You've still got a declining 50-day moving average. How about they're waiting for this to start moving up as one kind of indication to really give you some really, really good sign that things are actually really starting to really turn around. Things are looking decent from the lagging indicator perspective. Absolutely. You've got to remember, you've really got to start seeing really good indications that momentum is really moving in your favor. Higher highs are definitely coming through. There's no doubt. Make sure you've got a good reward to risk ratio thesis going behind you before you really start saying, I'm going to make sure that I'm getting in on this overall. There could be some better options out there, but things are starting to turn in a better way. You just want to make sure that you've got everything forming the thesis in a better way there and you're ready to take on that risk. But things are starting to form. Just the mere fact of making sure that that reward to risk ratio is working in your favor. But overall, like we're saying, there is still a lot of uncertainty going on overall. And making sure that everything is working towards the way you wish and you've got your calculations right. It's all a numbers game. That is the biggest thing with all of this. It's easy to allow emotion to get involved with everything when it comes to all of this stuff. But we're here to try and actually make sure that emotion doesn't run riot and get you out of control. Let the numbers tell the story, let the charts tell the story, let the fundamentals tell the story, if that's also one of the ways that you like to actually trade. There's nothing wrong with doing all of that kind of thing there. But let Yash and I actually help try and make things a little bit clearer in the way that things are going on. And if you like that part of the journey and this is actually making things a little bit easier for you, follow us with the journey in that way. And I'll pass you back over to Yash so you can actually describe how you can go about doing that as well too.
Thank you for that, Steve. And yes, guys, join us along the journey. A subscribe goes a very long way to keep you guys updated with what we do. If you like what we had to share with you guys today as well, please drop us a like. That also gives us a lot of motivation to keep it going. And anything you'd like us to do differently or anything you would like us to bring up, put that down in the comments and we'd be happy to share that with you too. For today's comment,
war again?
Yeah. Let's go with the words war again for today's comment. Put that down in the chat because that is where we are at right now. And we'll see how that progresses through the week. And for any person who puts that down in the comment, we'll give you a shout out on next week's video. Thank you, Mark, for your ongoing support. Appreciate you. But with that being said, that is all from us. We will see you on the next video.
See you on Wednesday, guys. Have a great week ahead.